Looking for information about bonds? Confused about yields? In this video, I go over bonds, what they are, how they work, and what they're used for. Hi, I'm Tom Mills with Mills Financial Services. In this video, I'm going to go over bonds, how they work, what they're used for, along with some of their associated risks. Let's get started. Bonds, also known as fixed income securities or debt instruments, are essentially a loan from you to either a corporation or the government. They have a term or maturity date, interest payments or coupon rate, and a coupon date, which is when the bond pays interest. There are generally two issuers when it comes to bonds, either corporations or government. Corporations will use bonds to fund things like business growth, new property or equipment, or undertaking new projects or doing new research. Corporations issue bonds because they need more capital than banks can generally provide.
Smithers, take out another mortgage on the plant.
So they issue bonds to spread that cost over many different investors. Government bonds, also known as treasuries, help offset deficits in the federal budget. Municipal bonds, which are issued by either state or local governments, use bonds to pay for things like schools or roads, stadiums, or other things of infrastructure. And agency bonds are issued by government agencies.
Highly funded yet unofficial government agency. We'll take it from here.
The most well-known being either Fannie Mae or Freddie Mac, which are mortgage loans. One thing to keep in mind is government bonds, unlike corporate bonds, are federally tax-free. And municipal bonds, as long as you live in the state in which they were issued, are also state tax-free. There are different types of bonds. There's zero coupon bonds, which don't pay interest payments, but they're sold at a discount and you make your money back at maturity. There's convertible bonds, which allows the holder of the bond to convert it into stock. There's callable bonds. Callable bonds can be bought back by the issuer and then reissued at a lower interest payment. They usually come with higher interest payments to make them more attractive to investors because of the chance of them getting recalled. And there's puttable bonds. Puttable bonds can be sold before the maturity date so you can get your principal back. If you like this video so far, be sure to hit that like button, be sure to hit that subscribe button, turn on those notifications. So how do you buy bonds? They can be bought directly from the issuer, but usually they're sold on a secondary market and purchased through a broker. Bonds are rated based upon their credit ratings. There are two well-known companies that rate bonds, Standard & Poor's or Moody's. Bonds with a higher credit rating are referred to as investment-grade bonds, while bonds with a lower credit rating are referred to as junk bonds or high-yield bonds. So what is a yield? A yield is your realized return, or how much interest you've made upon purchasing this bond. That's figured out by dividing the coupon rate by the market price. And then you can also figure out yield to maturity, which is how much money you would make should you keep the bond all the way through to maturity. And that's figured out by multiplying the coupon rate by the par value and then dividing that by the market price. Though bonds are considered safer than stocks, they do come with some risk. They're very susceptible to interest rate changes. When interest rates rise, bond prices tend to fall because you could go out and buy another bond the following day at a higher interest rate. What are bonds used for? Primarily they're used for income, and you can buy multiple bonds in a way that would structure your income so you would receive it on either a monthly, quarterly, or annual basis. They're also used to balance out a portfolio. Bonds have an inverse relationship to stocks, so when stocks go down, bonds tend to rise, which can reduce some of the risk or volatility in your overall portfolio. For more information on bonds or many other financial topics, be sure to check out these videos. Also, don't forget to hit that like button, don't forget to hit that subscribe button. We're releasing new content all the time. Thanks.